All right, welcome back. Today we're going to dive into a secret that really separates the pros from everyone else. It's a fundamental shift in how you look at the market, one that shows you what it's actually going to do next, not just what it already did. So let's get that edge.
Just think about that for a second. What if you had a tool that gave you a 2, maybe even a 3-week head start before a major turn in the market? And no, it's not some kind of crystal ball. It's about learning to read the market's secret language. And today, we're going to decode it together.
Okay, so why do so many people struggle in the market? Well, the source material is pretty clear on this. It's not always about picking the wrong stocks. More often than not, it's about using the right strategy, but at the absolute worst time. They call this the strategy mismatch trap.
I mean, think about it, right? If you've got this great breakout strategy that kills it in a strong uptrend, well, that same strategy is just going to get you absolutely chewed up in a choppy, sideways market. It's one frustrating loss after another. It's like trying to sail with the wind blowing right in your face. You're fighting the current instead of just flowing with it.
And here it is, folks. This is the big one. The aha moment that changes the whole game. While most of the world is obsessing over every little tick in price, the pros are watching something much deeper. They work off a very simple, powerful truth. Volume is what drives price.
And this really shows the difference in a nutshell. The typical retail approach, it's totally reactive. You're waiting for the price to basically scream at you that a trend is started. But the professional approach, it's proactive. Pros are leaning in, listening for the market's whispers, those footprints left behind by the big institutions in the volume data. That tells them where the smart money is moving before the big price move happens.
And that head start, it's not just a small thing. We're talking real numbers here. By getting in position based on these early volume signals, professionals are often getting 15 to 20% better entry points when the market's whole personality is about to shift. And in this game, an edge like that, man, that is everything.
Okay, so I've been talking about the market's personality, right? Well, the fancy term for that is market regime. Just think of it as the market's current mood. Is it on a mission, full of energy and moving in one clear direction? That's a trending regime. Or is it just, lazy, kind of bored and bouncing around without going anywhere? That's your range-bound regime.
So here's the kicker. We use volume to tell these two personalities apart. When you're in a strong trend, boom, volume just explodes whenever the price moves with the trend. That's the gas in the tank. It means the smart money is on board, pushing things along. But in a choppy, range-bound market, the volume just dries up. It gets quiet. It's a huge sign that the big players are just sitting on the sidelines, waiting.
Now, these market personalities, they don't just flip a switch and appear out of thin air. They're actually part of a much bigger and surprisingly predictable cycle that the market just moves through over and over and over again. And understanding this cycle is really the final piece of the puzzle.
Okay, so this cycle has 4 stages. It all kicks off with accumulation. This is where the smart money, the big institutions, are quietly buying things up after a big drop. That buying pressure builds and builds until, bam, we hit the advancing phase. That's the big public uptrend that everyone sees and jumps on. Then at the top, we hit distribution. This is where that same smart money is now quietly selling to all the latecomers. And of course, that selling leads right into the declining phase, which sets the whole thing up to start all over again.
I know. This all sounds great in theory, right? But does it actually hold up in the real world? Well, the source material gives us a fantastic, really clear example from just this past March of 2024. Let's break it down.
All right, check this out. In week 1, you get the first clue. The main market index is kind of drifting up, but look, the volume is weak. It's tired. At the same time, you see huge volume pouring into safer sectors like IT and pharma. That mismatch right there, that's a huge red flag. Then, by week 2, you can actually see the money moving. It's leaving the risky stocks and running to those defensive ones. And it wasn't until week 3 that the price finally caved, breaking down and confirming what the volume had been warning us about for 2 weeks.
So what does a pro do with that 2-week head start? They don't panic sell. Nope, they just adapt. They take their profits off the table from their old strategies. They pull back their risk and they shift into a more defensive game plan, totally ready for the change they already saw coming. They sidestep that whole trap we talked about at the beginning. So how do you actually do this? Well, it really boils down to these 5 principles. It's about adjusting everything: how much you invest, how long you plan to hold, even your stop losses to match the market's current personality. And this one is huge. You pick the strategy that fits the market, not just the one that's your personal favorite. And you always validate what you're seeing with the volume data. This is how you go from being reactive to being truly strategic.
So, I'll leave you with this thought. Price tells you what just happened. Volume tells you the story of why it's happening. And once you shift your focus, you're not just staring at a chart anymore. You're actually reading the intentions of the biggest players in the game. That, right there, is the professional's edge. The only question is, what are you going to be watching from now on? Thanks for joining us.